Since uploading my strategy video, I have had a few people ask me how I set up my TradingView. So I thought that in this video, I will go over everything on how I get my TradingView looking like this. And don't forget as well, if you do have any questions, just let me know in the comments and I'll always try and make a video on subjects that you guys want to see. And without further ado, let's get into the setup. Now, when you first log into TradingView, this is what your chart may look like. Now, although this is a fairly clean setup, I like to just make a couple of changes to this. First one is changing the color of the actual canvas itself. I just feel like this white is a little bit strong on your eyes, especially if you're looking at it for most of the day. So in order to change this, just right click anywhere on your chart and then just go to settings. And then if we start on canvas, you can see here background is solid, and I just change it to this cream color here, which to be honest isn't the nicest looking color on the canvas, but it just helps with some of the eye strain, just because it's a little bit softer than pure white. Now this wasn't part of the original color palette, which you can see here, so I just added a custom color. Now if anyone is interested in getting this exact color, you can see there the color code. So if you just type that in and then just click add, you will see the exact same color I've got going here. Now, as well as the color of the canvas, I also like to change the color of the candles. Now, the reason I like to do this is more of a psychological point of view. And this might sound a little bit strange, but I just associate green and red with sort of good and bad. And if I was to take a buy position that I ended up getting stopped out of, I think seeing red candles just has a little bit more of a psychological effect. So I like to keep the color of the candles nice and neutral. So for this, if you go into symbol, and we can change the color of the body, the borders, and the wicks of each candle here. So for a bullish candle, the color of the body is the second gray in, and for a bearish candle, again, it is a custom color. So if we go on to add custom color, you can see the color code here of this bluey teal kind of color I've got going on. This again just keeps things nice and neutral. I think it looks nice and clean on the chart as well. Now for the borders, I do have this gray color here, so it's the fourth one from the right, and that's the same for both bullish and bearish candles. And then the wick is also the same color. Now once all this is set up, you can actually save this template by clicking there on save as and then just giving it a name. Now the reason you might want to save it is because if you trade like me, we do use the split screen view. So on TradingView, if you go to layout setup, because this is the standard layout where it's just one chart at a time. So you can see here we're on the hourly on USD JPY. Now I like to look at both higher and lower time frames at the same time. So to do that, I click on layout setup and I then choose this second one down here on the left hand side, which is the split screen view. Now for the first time you do this, this is what might happen. You might have the new chart here on the left, but then the standard on the right. So to change that, you can just right click on the new chart, so the hourly chart where we've already changed the colors, go to settings and then just click on apply to all, and you will see that change here on both of your charts. And there we go, we can see the clean setup now on both of these charts. Now in this video, I won't go too much into this strategy. Obviously I've got some videos on my strategy already on the channel, but ultimately the reason I use a split screen view is the higher time frame is on the left and the lower time frame is on the right. And all I'm looking at here is how the previous hourly candle has closed. So this one here on GJ, you can see for an hour price has pushed up, which means when the new hourly candle opens at 1 p.m, I would then be looking for a continuation of this bullish momentum, which when we look at other British pound pairs, we can see from 12 to 1, price is pushing up on Great British Pound AUD. So because of that, when the 1 p.m. candle opened, I would wait for a high to be broken, which is there pretty much immediately. Stop loss goes below this low, and then whatever the target may be. That's why I like the split screen view. It means I can see the previous hourly candle closes without having to go back and forth. So if we were doing it like this, we'd have to start here on the hourly chart, wait for the new hourly candle to open, then go down to the 5 minute. And don't get me wrong, that isn't the end of the world. However, if it's just all on one chart here, it's so much easier to see. We can see when the new hourly candle is pushing bullish. We can be looking at our entry here on the 5 minute. It's just a lot easier to do it this way. Now the only tools I've got set as my shortcuts are the following. And to be honest with you, I only really use the long position, short position, rectangle, and horizontal ray. The rest of these I don't use very often at all. If you look at the color setup for the long position, so just double click on it and you can see the line that I've got is this color green. The stop loss color is the first red, but the opacity is at 25%. And the target color is the same color green as the line, but the opacity is at 25%. Stop loss is the exact same colors, just reversed. So the line is the first red, stop loss again first red at 25%. And then target is that green at 25%. The rectangle I use just to find out where price is pushing into. So say for instance, I'm looking to potentially buy Great British Pound here because I've seen how bullish it has been pushing. I would always look to the left slightly. I don't need to be looking all the way back here necessarily. I'd just look on the hourly chart to see if there was any areas of support or resistance, just because that way I'm less likely to take a buy here because price is just pushing into this area where you can see it has rejected from previously. And by using a split screen view, I mark it out on the hourly chart and it automatically shows up on my 5-minute entry chart. And that's really the only time I use the rectangle. The layout is like this. I don't have a border on it, and it is the 4th grey in at 28% opacity. Don't tend to use trend lines very often, but I do use the horizontal ray. Now the times that I use the horizontal ray is to mark out the 50% level of the previous hourly candle. Now the reason that I do this is we can see on Great British Pound Japanese yen that the 9 till 10 candle has closed bullish. At the same time, Great British Pound Aussie dollar is also bullish, as well as Great British Pound US dollar. So because of that, my belief is that British Pound is strong. So just as the 9 till 10 hourly candle closes, I will mark out around the 50% level of that candle. Doesn't necessarily have to be absolutely perfect, but I would just mark that out with this orange horizontal right here. Now the reason I'm doing this is I believe that price is going to continue upwards because of how British Pound Japanese yen has closed previously, and because the fact that Great British Pound US dollar is bullish and Great British Pound Aussie dollar is bullish as well. So I believe price is going to go up. Now what I would do is I would put a buy stop order above the previous high, ready for when the new candle opens, put the stop loss below the low. Now as soon as the new hourly candle opens, I'll have a buy stop order ready to go. And what happens sometimes is the new hourly candle will open, immediately break the high, and then continue hopefully in your direction. Or obviously if you sell in, the new hourly candle opens and breaks the low. However, what can happen sometimes is the new hourly candle can open, not trigger you in by not breaking the high, and potentially pull back. Now when price used to do this, I just used to delete the order and just not get triggered into any trades. However, my belief is that price is going to continue upwards. So even though price hasn't triggered us into the trade and has broken below our original stop loss level, doesn't necessarily mean that we can't get into a trade. So this orange bar is marking out the 50% level of the previous hourly candle. Now the reason I mark that out is as long as price doesn't break below this level, I am still interested in getting into that position, simply because of, like I said, the bias that we are buying, and price can retrace around 50% of its body sometimes and then continue into the direction. Like I say, sometimes price opens and flies down, other times it just retraces before continuing into that direction. So now the new hourly candle is open, I would just be looking for an entry opportunity here. So you can see that price didn't actually come down to the 50% level. It doesn't always. Like I say, I'm just looking to make sure that price doesn't break below and close below this level. If it does, it's more likely that price may be reversing. However, now because we've had a retracement, price that's been pushing for an hour has retraced a little bit and then may continue upwards. It's given us a stop loss to work with, and now hopefully it will just continue upwards, which you can see it does. And that's why I mark out the 50% level. Provided price stays above here, I am still interested in the trade, or below here if I am selling. The horizontal line, I don't use very much at all. Vertical line, I don't really use either. I could do with taking these off. I don't really know why I've got them on here. And then the fib as well. Sometimes I have tried trading with fibs, but I don't really use them anymore either. And then price range is basically just a measuring tool, which again, I don't use very often. I like to keep the charts nice and simple. I don't have any indicators apart from one. And the only reason I've got this indicator is just it's a really quick way to figure out lot sizes for each trade. I know there is tools and baby pips and stuff, but if I can do it directly on my chart, it just makes things a little bit easier. So this is the lot size calculator by that guy there. And like I say, this just helps me figure out what size position I'm taking. So for instance, if you've got a $5,000 account, put that into your account balance there. Risk percentage is obviously whatever you're risking per trade. And then the lot size in pips. Obviously we figure that out by using the buy and sell tools. So when I'm putting the order in, you can see here, this 251. This just means 25 pips. When we actually measure that out by pressing and holding shift and then clicking on the screen, you can see that that is just 25 pips. So in here, I would put 25, and then you can see it gives us our lot size there. So to risk 1% of the $5,000 account with a stop loss at 25 pips, I need to be using a lot size of 0.28. In terms of the symbols, I've just got them split up this way. So these are the main pairs that I trade, and I just have this under the main column. I've then got the pairs that I use for confluence here. So basically I just added a section which just basically separates your different pairs, and I just called it confluence, and under here is all of the different confluencing pairs that I use. So like I said earlier, if I'm looking to take a sell position here on AUD USD, which I should have been doing all day. Look at all of these candles we could have traded. I would then look at AUD CAD as one of my confluencing pairs, and I can see that that is also bearish, showing weakness in the Aussie dollar. And then AUD JPY is another confluence, so I can see that the Aussie dollar is clearly weak. I would be looking to take some of these sells here. And that's basically how I organize the main pairs that I trade, and then the confluencing pairs there. In terms of any of the tools that I use on TradingView, basically I just use alerts. So let's say, for instance, I was taking one of these sell positions here. Now what I tend to do is I tend to move stop loss to break even at 1-to-1. So when I'm marking out this trade and I'm actually triggered into the trade, I find where my 1-to-1 level is here, hover over to this plus button and just click on that, and then just click on add alert. I usually then rename that as well to stop loss to break even, just so when I get an alert on the phone I know exactly what's happened. And then something else I may do, depending on how much room there is to the downside with this trade, is I'd mark out the 1-to-2 level. So potentially if I was maybe going for a 1-to-3 on this trade, you might want to mark out the 1-to-2 level, because then if you do get down to a 1-to-2, potentially you could take half off the trade. You could maybe move your stop loss to a 1-to-1 or whatever it may be, but you just drag it out on each one and then just set your alert whereabouts you need it. And then here, for instance, when you take profit, if you would like to, you just have AUD USD win, and they're pretty much all the alerts that I use. And that is pretty much it. Like I say, I keep things really quite simple. I need my trading to be simple, and this for me is just the most simple way to trade. Having these neutral colors as well does help stop emotions getting involved as much. That's pretty much the layout. Nothing special, but like I say, I got asked in the comments how I set up my TradingView, so I thought I would show everybody. If you do have questions or anything like that, I'll always do my best to accommodate a video. Really hope you enjoyed the video. I will see you in the next one.